a very fast video. I'd pull the mic over, but this is going to be so fast. I'd use my backup chip. I had 2 chips that I use in that thing, and I'm trying to edit a BONHAM video I just did, and so that I can't pull the recording chip thingy out of the iMac, so I had to get the backup. So we're on the backup power. This is my 3rd Market Investors Corner, we'll call it. Today is the Ides of March. Man.
The Ides of March. March.
Seriously. So, here's the deal. Again, we have, remember, risk in any asset. The future value of any asset, there are risk components in there that economists and intellectuals and traders break down to, like, well, international risk, political risk, interest rate risk, inflation risk. I never really understood why those were separate, but I think it's more of a conceptual thing. But right now, there's a lot of risk in the world, okay? We have the president stuff going on, whether you voted for him or not, or like him or hate him. That's risky. With the cabinet and people kind of going out and, you know, this prostitute stuff, and whether there's smoke or fire, even if you don't have to you don't even have to go in and individually judge it and see the validity of it. The fact that it just exists in the media and therefore in the world of everybody else who buys and sells stuff is significant. Does that make sense? Plus 2, a little Russia action. Russia's you know, let's just say this. Wasn't Russia just talking about, or Putin saying that he's developing a torpedo, a drone torpedo with a 100 megaton nuclear warhead on it? That's risk. That's just risk. That's non-stability. That's anti-serenity. Well, anti-serenity mathematically equals risk. Okay, risk is increasing. When risk increases in assets, like stocks, get the hell out. What I'm saying is get out. We're going to be back down, I think, below 23,000 in the Dow in no time. Also, too, have you noticed, people say, like, the correction's over. Have you noticed that there's been a little bit of an inverse relationship between the NASDAQ versus the Dow and the SPOOs? That's significant. I'm serious. So, what I recommend you do, you could buy some puts, you know, if you want to. I'm certain this is going to happen. I'm telling you. At the very least, we'll lose 1,000 points. I mean, it's going to happen. I say in the next 2 weeks. Again, look at my first 2 investor market corner thingies. I was right those times. I mean, damn right. But I'm going to give you some specific advice. So even if you just buy gold, okay? Last time I looked, gold was at $13.19 an ounce. It's had a little range, like what, 13.12ish? Maybe I'm wrong. Up to like 13.45. I think we'll be at 13.5, 13.50 in no time. Buy some April 13.40 calls. Any money you lose in the stock market, what's going to happen is going to be more than if you buy these calls. What I'm saying is the likelihood of those calls exploding into possibly like a 30 or 40 time your investment thing. That's what I say. So what I'm saying now is get the hell out of stocks, or at least just observe. If you're a drummer friend of mine and we're playing and you're an investor guru, put 50 grand into some calls in gold, or even some, you know, some E-mini puts. Do options. You know, they're always good because if you get the explode. I anticipate somewhat of or buy the VIX. Or other options on the VIX. Anyway, more videos on the way. I'm just about done editing this BONHAM video concerning his bass drum. Thank you.